good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Saisha Faridi. It's the day of the weekly options expiry and it seems to be happening on the positive side. In fact, we went very close to the mark of 19,500, just shy of that 10 points. From there, we have retraced a bit, but nonetheless, the momentum is very strong. And the good news is that the Indian market is heavily outperforming the rest of the globe. So if you look at the European markets, they have started on the back foot. There's a cut of anywhere between 1 to 1.5%. Hang Seng, for instance, was down about 3%. Asian markets were on the back foot. And amidst all of that, it's the Indian markets which is outperforming yet again. A solid outperformance coming in there. It's Reliance which is contributing almost half of the gains at the index level. It's contributing almost 30 to 40 points on the upside. So that Reliance is one of the heavyweights that's pushing the index higher. But not just that, there are a lot of sectors which are doing well. Case in point being energy, OMCs, power stocks, even real estate stocks. In fact, real estate, as we've been talking about, is the best performing sector so far for the year. The other pocket which is actually on fire today is tire stocks. Look at that big move on CEAT. I don't remember the last time seeing a 17% up move. No specific news flow. Yes, there was an AGM yesterday. Maybe the street is taking something from there because others like JK Tyre, Apollo Tyres, they're all excited in the trading session. We'll talk a lot more about tire stocks, but let's take a look at some of the other buzzers as well. MCX, that one has gained 9 to 10% in the trading session. So a solid up move coming in. SGVN has been on a tear off late. That along with Torrent Power is also up around 4 to 7%. So a lot of stocks in the broader markets which are showing a lot of buoyancy, Aisha.
Oh yeah, and if the street is not busy reacting to auto launches, then it's the Q1 updates, right? Marico, for instance, that's been a bit of a disappointment. The consolidated revenue has declined to now low single digits. The value growth was lower due to the price interventions, and that's clearly weighing heavy on the stocks. Right now, Marico is a stark underperformer. Right now, also, it's down about 2.25% as we speak. Ujjivan SFB, though, has managed to impress the street. The CASA is down sequentially, about 3%, but an uptick of 27% coming in on year. And advances, of course, have seen a steady uptick of about 5% on a sequential basis. Couple of other stocks which are holding up because of the order wins. So KEC International, bulk of new orders equating to almost about 1,042 odd crore rupees across segments. And then Tata Power, which got a 1,744 crore rupee order for smart metering project in the state of Chhattisgarh. That is one stock which is also flying high in trade. And then OMCs, after the JP Morgan update, crude seems pretty stable at that $75 to a barrel mark. It's an overweight, neutral, and an overweight then on IOC, BP as well as HP in that order. And price targets as well have been upped by JP Morgan. The stocks are fairly buoyant in trade. In fact, on the subject of OMCs, let's also hear it out then. We chatted today with MK Surana, the former CMD at HPCL, as well as Dayanand Mittal from JM Financial Institutions, to try and understand whether the street is right into reading into the upgrades which are trickling in for OMCs as a pack.
I believed, and I have said earlier also, that the oil companies are underpriced to compare to what the potential they have. Now, of course, market have got a way of looking at the things, but I think they are in a sweeter spot right now when the crude price is lower and the margins being healthy and possibility of crude prices remaining benign for some time.
We prefer gas stocks more as a secular story because the penetration of particularly the CGD companies, because the penetration is quite low for CGD business in India. So we like IGL, Gujarat Gas, also MGL, though in that order, primarily because of secular volume growth story. Also, they have got a reasonably decent pricing power, though not as strong as it was 3 years back, but still CNG is 40-45% cheaper versus petrol and about 30% cheaper versus diesel, which is decent enough for the convergence to continue. So CNG would be a preferred pick. Among oil names, given a view of crude price being high, we particularly prefer upstream companies over OMCs for the moment. We like ONGC, particularly because of reasonably strong dividend yield of 6 to 8% that they can deliver going forward as well. And valuations are quite reasonable at about 4 times earnings.
Okay, a lot to discuss in the market, so let's do just that with our battery of experts. We have Shabani Sarkar-Kurian to talk to us about the fundamentals of the market, and Naresh and Kunal as always on the technicals. Naresh, you go first. We just went to that level of almost 19,500 and retraced from there. What does the chart check suggest? Are we likely to head higher, or 19,500 will be the top zone for now?
So for now, the case is till the time we don't see a reversal signal, you continue to slowly and steadily go up. But the risk reward is no more in favor for the index longs. One has to be more stock specific. Overall at 19,500, 600, one has to be more alert for a reversal signal rather than to play the momentum on the index. But if we look at the stock specific structure of the index constituents, we are seeing ICICI Bank hit a new all-time high. You have a Reliance Industries showing momentum today. So every day, one of the heavyweights is showing momentum. So out here, for now, the view is be stock specific. Index could form a new range, whether it peaks at 19,500 or 19,600, 700. The base is shifted higher to 19,200. So for now, time to be more stock specific. Index may not have a huge upside from here for the near term, but stocks could do.
Kunal, while Reliance is still nowhere close to 2,700, but it's really doing all the heavy lifting. It was doing yesterday and it's doing today as well. More move, more upside on the charts, you think?
Yeah, more upside for the charts likely. And today it's more of the oil and gas, the entire energy sector, which is doing well. So even the beleaguered stocks like NTPC, ONGC, GAIL, etc. Many of these stocks have now started to show signs of a breakout for themselves. So I think that's a good sign because it's not just sole Reliance which is now pushing the index higher as well as the energy index higher, but I think it also has supports from many of the other stocks within the same sector. So I think that's going to be beneficial for the stock price. Even on the short-term charts, I think what we are actually seeing is the stock forming a higher base pattern, a higher support pattern. So it has this odd tendency of going into a breakout and then all of a sudden, when there is too much expectation to the stock price, even from a short-term play, it goes into 1 or 2 days of mild correction. The corrections and the support which forms at that price for Reliance Industries are higher than the previous support. Like what we saw yesterday, for example, the stock formed a support of 25.8090 on the spot levels, and now today it's moved up higher to 2640 odd mark. So all in all, it looks attractive as a chart pattern. I would expect the stock to gradually head towards 2700, 2750 levels.
Shabani, hi, welcome on board. Thank you so much for making time and speaking with us. Of course, we'll discuss the auto space in detail, but I wanted to begin by discussing the tire stocks today because they definitely are on the spotlight. SEAT is up as much as 18%. Apollo Tires, JK Tire, you name any of these counters and they're flying away. My question is, the entire tailwind of the crude derivatives falling and the raw material prices being favorable is known, right? What do you think is happening suddenly in these counters that explains the move?
Yeah, hi, good afternoon. So when you look at the entire auto and auto ancillary pack, one, as you correctly pointed out, that with input costs coming off, there is that margin tailwind, which is possibly known. But as you start seeing that in terms of numbers, that will start getting built in. This is also a segment which, in terms of valuation, looks fairly reasonable. So that's the second aspect. And the third aspect is if you look at overall growth, especially in terms of replacement demand, the replacement demand, which was missing for a long period of time, should also aid volume growth going forward as well. So therefore, this whole earnings growth trajectory for the segment led by volume growth, margins also expanding and valuations being in your favor is possibly something that is resulting in positivity where the entire auto Ang space is concerned. So if you look at the entire auto pack and the auto Ang segment, this is one space where we have been fairly positive, and our positivity at this point in time at current valuations remains.
So just speaking to one of the analysts, and what their view is that Street is not fully appreciating that the peak of the capex, which was denting the industry return on capital, is actually now over, and that the entire ROCE push will now come into the numbers for the tire stocks, because the capacity expansion that was happening over the last couple of years is now going to bear fruit. That's one of the reasons perhaps. But within the tire pack, Kunal, if I had to take your top bet, which would be that counter? And what's the view on SEAT specifically? Would you still buy?
So Apollo Tires still remains to be the top bet. It's more liquid. It's been more stronger name, more consistent in terms of the price trends. And what we've seen for Apollo Tires is the supports moving up higher on a very gradual manner. So I remember, I think from 300, 305 levels, the stock moved towards 330, 340 mark, which is the first set of major resistances, then up the base higher to 380. And now clearly 400 seems to be a good support for the stock price. In fact, in the last 1 or 2 weeks, the stock corrected marginally from the 420 levels, but retraced back towards 400, found support at those levels. There was a demand which came back for Apollo Tyres, and then the stock managed to move up higher back towards 410, 415 mark, which means time and again when you see a support being raised up higher, you expect the stock to move into a gradual uptrend. Now, in between such kind of a strong trends, there are always high beta stocks, or the stocks which move out of consolidation and give you those sudden returns. But the consistency is not there for these names. For the like of CEAT, I think, for example, the last time the stock had seen a very strong 3-day, 4-day strong up move was in the month of April, May, where the stock moved up higher to, I think, 2,200 levels. And from there, it consolidated for almost 1.5 odd month. So I would believe Apollo Tyres seems to be the stronger name. JK Tyre on the non-FNO stock also looks very attractive and more consistent.
Right. Well, OMC's definitely got to revisit that pack. Kunal was just highlighting as to how the entire energy basket is looking good. But Shivani, do you also believe that they're in a sweet spot, given that crude seems to have stabilized and this is going to lead to an uptick as well for their GRMs?
Yeah, so if you look at the entire oil and gas space, specifically for the OMCs in the near term, because crude has stabilized, we would possibly see improvement in terms of marketing margins and therefore recoupment of some of the losses that they had made, and therefore moving from loss to profitability. If you look at pure GRMs have actually come off. However, the marketing margin improvement should help offset any kind of weakness that you see on the refining side. Also, the entire pack is trading at fairly attractive valuations, and that is something that is possibly an opportunity from a valuation perspective. However, within the oil and gas space, a more secular segment where we have been positive on has been on the gas utility space. What we believe is that incrementally you should start seeing volume growth uptick where the demand goes, and that should aid in terms of overall profitability and growth. The entire move that you have seen in terms of adoption of or moving to a more cleaner, greener fuel option, that is likely to be something that we will see over the period of time. And therefore, within the oil and gas space, structurally, we prefer the gas utility pack. But in the near term, you do see that potential upside where OMCs are concerned, primarily because of improvement on the marketing side.
The insurance sector, let's just highlight that as well, because the June general insurance data has just come out. The non-life insurance sector has actually seen a growth of about 14% on a year-on-year basis. Non-life insurance industry premiums as well have gone up. The private sector general insurance companies have actually posted a growth of nearly about 17%. And PSU general insurance companies have seen a growth of about 7% on a year-on-year basis. Standalone health insurers, they've seen a growth of a staggering 23.5%. Star Health premiums are up almost about 19%. New India Assurance premium, that's seen a growth of about 5%. And ICICI Lombard as well has posted a growth of about 21% on a year-on-year basis. In fact, the premiums as well have grown now to 1900 plus thereabouts from the earlier 1588 thereabouts or so. Shibani, your take on insurance, and I'm going to put the entire basket here, both the standalone players as well as the, the banking ancillaries.
Yeah, so let's talk about insurance in two parts. One, the life, and the second is the general insurance segment. So starting with general insurance, clearly we are starting to see improvement in terms of monthly numbers, and that's showing up in terms of the premium growth that you're seeing across for the industry as a whole. Now, within that, the segments which are clearly doing well, one is health, and within that, retail health is showing signs of improvement. The second is segments such as fire, etc., is also seeing fairly strong growth. The only segment where there is significant amount of competition and therefore pricing pressure has been the motor segment, and that's been a drag. But overall, we believe that even on the GI side, after a fairly long period of time, you are starting to see growth coming back. While it will still take time for some of these companies to get back to underwriting profitability, but at the margin, growth coming back is good news for the sector. Now, similarly, on the life insurance side, the players have gone through significant amount of turmoil, both in terms of demand coming off, as well as the tax changes that were announced recently. However, now at the margin, what we are starting to possibly see, and this is a trend that needs to be watched out for, is whether protection growth comes back, and that could help offset some of the impact because of the tax changes on the higher ticket non-par segment. So overall, life insurance as a space, as well as GI as a space, have been underperformers over the last 2 years. And possibly we are now coming to a point where things seem to be bottoming out. And at the margin, you should start seeing improvement, both in terms of growth as well as in terms of the overall profitability. However, one caveat for life as a segment, margins, which were the key drivers for the overall VNB growth, will possibly come off, and APE growth or premium growth will be the key driver to drive the overall VNB growth for the sector.
That's a take coming in. In fact, on that note, we'll do one thing. We'll slip into a very short break because there's a smart recovery underway and we don't want to miss that. But just taking a small breather on the show. 500. That's been scaled for now. It's 19,501. No surprise that it's a fresh record high for the Nifty, for the Sensex, the Midcap and the Smallcap index. Not the Smallcap index actually, the Midcap index that should be sitting at record high level as well. So that momentum on the upside continues. Day of the weekly options expiry, and that too is going to come at play in the next 10-15 minutes or so. So definitely lots to really watch out for as far as the markets go. But let's also address some of the price volume buzzers in the trading session. Apollo Hospitals, that one is trading high by 4 to 5%. It's seen a breakout from the last week of consolidation. The volumes are 2 to 3 times the average that we have seen, and the advances are also, it's been advancing for 4th consecutive session. I'm talking about Apollo Hospitals particularly, so maybe we should pull up that counter. Separately, Nifty Realty as well, that's sitting at an 8-month high level. The volumes are 3x the 10-day average. Torrent Power, that one has seen a breakout from a downward sloping resistance trend line. Volume is as much as 8 times the usual average, and that too has snapped a bearish pattern. So all things look quite positive for that one. And let me add MCX to that list as well, because that stock is higher by what, 8 to 9% now. Nuresh, your take on this entire list of names? Anything that catches your attention? Apollo Hospital, Oberoi, Torrent Power, MCX.
Apollo Hospitals and MCX is interesting. So Apollo Hospitals gave a breakout move above that 4,600, 4,400 mark, then made a pause at 4,900, and now it is again after making a pause at 5,300, again making a fresh move. So classical higher top, higher bottom formation. The previous all-time high for the stock is closer to 5,900. So that's a target price for the stock. Today's price action as well as volumes is pretty strong. So a buy on dips from here on also with a target price of 5,900. And we've seen the whole hospital space do really well. Even after going to 5,900, it would still be a catch-up only for Apollo Hospitals. MCX is interesting for the reason that the stock has seen a lot of volatility around this band. And even today, around the same prices of 1,650 odd, it has taken a little bit of a pause. Now, the recent high just a few days back, when after that it did a gap down, the high was 1,655. The high of December was 1,650 to 1,700. As well as in January, it made a top around 1,650. So if it can sustain 1,650, 1,700, that would be a major trend change for the stock. It has eclipsed the gap down, which is very interesting. After seeing such a big gap down, if the stock is able to sustain above those levels, it could be a surprise on the upside. So out here, the stop losses would be a little deep at 1,580, but this could eventually break out above that 1,650, 1,700 mark.
It's quite intriguing to know that even in that 100 plus point recovery that the Nifty has seen from the session lows to now hitting that 19,500 mark, while Reliance may have done all the heavy lifting, it's not the top gainer on the index. It's actually your usual suspects. M&M is now clocking a 4% gain as we speak right now. Apollo Hospitals, of course, is the other big winner today. And then Tata Motors, that's also holding very steady 2%. In fact, if you bring up the intraday graph of Tata Motors, it's not been a very steady performer today, but that big move has come in the last one and a half hour or so, wherein now the stock has jumped up to that 600 plus point price point. Shivani, before we let you go, just wanted to understand as a house call, where do you think that the markets are, which are the underrated sectors right now, according to you, where you do think that there is further headroom to go, and what's looking ripe right now?
Yeah, at a headline market level, clearly now valuations have moved up to about one standard deviation above long-term averages. However, the most important factor is that earnings trajectory continues to remain very strong. And if you look at expectations of earnings growth over the next 2 years, India clearly stands out on a relative context with the highest earnings growth expectations. And hence, delivery of earnings for the market from here on at these current valuations becomes important. What we believe is that if you look at sectors at this point in time, you need to continue to focus on sectors where there is earnings growth visibility. While you're right that valuations have moved up in most pockets, however, we continue to believe that domestic facing sectors are still better placed because earnings visibility is still fairly strong over the next few years, aided by margin tailwinds as well as volume growth starting to pick up. So sectors that we are positive on continue to remain the capital good industrial space. We continue to believe that banks are fairly well placed, and here valuations are reasonable in the context of the return ratio improvement that you have seen over the last 2 years. The other spaces where we are positive on include auto, cement. These are some of the other segments where we believe that there is still some headroom for valuation re-rating given the kind of earnings growth expectation which remains strong for this segment. In terms of where we are still a little bit cautious, we continue to be cautious on global cyclicals, which include metals. We are somewhat still cautious on IT. While I might caveat that large cap IT valuations have corrected quite sharply, and therefore for large cap IT, significant downside may be limited, but there are still some uncertainties with respect to growth and margin outlook, which is weighing on the sector.
Leave it at that. Good to have you on the show as always. Let's just mark what's really happening, not in the markets. We are talking about, of course, inflated asset classes, but actually the most inflated asset classes, the biggest spike that you're seeing right now, Anisha, is actually in cumin and turmeric prices. Did you know that?
No, it's quite surprising. I know about the tomato prices and the prices of other vegetables soaring, but this was a bit of a surprise.
Yeah, I mean, even ginger. Kunal, you obviously didn't know that.
So-called aate dal ka bhav nahi pata hai.
So much for trend analysis. No. But let's chat a little bit more about this with Mr. G. Chandrasekhar, economist and commodity market expert, joining in on the show right now. Mr. Chandrasekhar, firstly, for our viewers, help us understand why this sudden spike in prices, across the board, from cumin to turmeric to, of course, vegetables and fruits. Everything is seeing a spike.
Yes. There are multiple reasons, of course. The first is the risk and the threat of El Nino. We had a delayed onset of the monsoon, and the progress has not really been satisfactory. Even as of today, or as of yesterday, I must say, the country is facing a 16% deficit in monsoon. The whole of South India is in deficit except some parts of Tamil Nadu, and plus Bihar, plus Odisha, and several other parts of central India, they're all in acute deficit. Whereas Gujarat, Rajasthan, of course, have enjoyed reasonably good rainfall thanks to that, Biparjoy, which for people turned out to be Bipar sorrow, but for farmers it was good because it created enough subsoil moisture. So one, the monsoons aberrations in the progress, because what is important for the southwest monsoon is not the total quantum of rainfall, but a temporal and spatial distribution of rains over 4 months. And that is the start, and the progress so far, in my view, has been less than satisfactory. This is number one. Number two, look at turmeric, for example. Turmeric is an early sown crop. It is actually sown even before the monsoon arrives. And there was a delay in the arrival of the monsoon. Therefore, farmers were quite apprehensive. Look at jeera, for example. Last year, Gujarat, which is the largest producer of jeera or cumin, actually had unseasonal rains in October, November, which actually destroyed a part of the crop. Therefore, lower production. The third reason is actually export. the global demand for Indian spices is absolutely robust, whether it is cumin seed, turmeric, or coriander. I think our export numbers are looking fantastic. The very large export demand, as a result of which domestic prices have risen. For example, January to April, turmeric export is up 30% year on year to 65,700 tons.
Sure.
And in fact, that's a big number.
Yeah, absolutely.
Similarly.
No, sir, I get your point, but just to come back to the first couple of reasons that you mentioned, a part of it is also because of the unseasonal rains or the lack of rains, as you talked about. So would you say this is just a very, very temporary phenomenon, maybe next 10, 15 days, and it should stabilize then?
No, I'm afraid this will continue because farmers will still continue to remain apprehensive about planting spices on a very large scale. Already last year, the coriander acreage was lower. And this year, given its huge volatility in prices, farmers may not be enthused to expand the acreage, particularly with the looming risk of El Nino, dry conditions, etc., etc. So my sense is 23-24. This year, spices production may not see a spike, whereas demand will continue to grow, both domestic consumption demand and export demand. In my view, prices will continue to remain fairly elevated. I'm not saying the current prices will continue for the next 6 to 8 months, but there may be corrections, obviously, but they will continue to remain elevated, in my view.
Okay, sir, on that note, we let you go. Appreciate you joining us and telling us what the ground reality is with respect to prices, the reason, and unfortunately, it looks like that some of that price rise is going to be sticky on account of the export demand surging and the overall metrics coming to play. But for the markets itself, what a solid rally, what we are witnessing, 19,500 is something that we are again looking at touching. It's a lot of heavyweights which are doing the, most part of the lifting today. So apart from Reliance, you have M&M, which has surged 5%. That's sitting at record high levels. You also have Britannia, which is at record high levels. Power Grid, the slow and steady mover, that also has inched higher by 3%. Again, life high level coming in for Power Grid. Apollo Hospitals up 4%. Tata Motors is sitting with quite a bit of gain as well. The only sore loser is Eicher Motor, which is down 3%. And over the last 3 trading sessions, that has been on a downward trend. It's lost market cap of almost 11 to 12,000 crore rupees in a matter of last 3 days itself, and continues on the downtrend. And it's been a long while that we haven't seen this kind of successive, downfall on Eicher Motors. Kunal, quickly your take on some of these names, the ones which are hitting record high levels, Power Grid, Britannia. They haven't moved that much. Would you now bet on them?
Well, Power Grid, yes, I think that's a stock which looks attractive. Again, coming from the same space of power, as well as the PSU, looks to be more of a breakout candidate, and the breakout would sustain for the stock. I think it scaled past about the 260, 265 levels almost a week back, consolidated. Mild retracement for the stock around 250 to 55, and now it's come back about the 260 mark, which means it's going through that staggered uptrend process. Eicher Motors, on the other hand, which you mentioned, I think after 3 or 4 days of very sharp downtrend, the stock I think has come back into oversold nature of indicators. So I think at current levels, I would not be extremely bearish on the stock price. In fact, I would probably wait out for another couple of days to actually go in for a contra buy on Eicher Motors, because most of the indicators on the short term, both on the hourly as well as on the daily time frame, have come back into oversold indicators for Eicher Motors.
Sure. Okay, that's the take coming in on Eicher, and of course some of the big buzzers, the likes of M&M as well as Tata Motors, which continue to hold out. But Kunal, any closing strategies? So
Reliance Industries is the stock which I would continue to be bullish on, trading now at 2640, 2645 mark on the futures. Would look at to trade the stock for a target of 2750 over the very near term.
Right. Naresh, what about your closing ideas? Naresh, you're on mute.
Yeah. That would be a buy on Bosch Limited. The stock has given a short-term breakout over the 19,400, 500 mark. And the only stock in the auto segment which is yet to break out. The high for the last 1 year is closer to this 19,500, 700. So could see a fresh move towards 21,000 here. So it looks promising.
March looks promising. That's the word coming in from Nuresh. But time now to slip into a very short break. Don't go anywhere.
Back with closing trades, right here Nifty now had a touch and go moment with another historic high. We've made it to 19,500, so call it whatever you may. This market doesn't want to consolidate any further, and now you've got those participants finally waking up, like a Reliance, for instance. For the last 2 trading sessions alone, it's actually made a decent move and it's been powering the Nifty ahead. So that holding out. There's M&M now, by the way, is at the highest point of the day. It's almost clocking in a 5% move on the futures. So that's really been soaring. Apollo Hospitals almost a 4% gain there. Tata Motors over 2% gain there. Britannia, which is sitting at highs again. That, Axis Bank, ONGC, L&T, these are all contributing to today's move. HDFC Life, of course, has gone into a bit of a sabbatical mode ever since that move that you had play out in the entire sector, not just HDFC Life alone. iShares continues to lose. Maruti is down after its move yesterday post the Invicto launch. Hindustan Bank, Bajaj Finance as well has slackened ever since its day before's mega move. ITC, Divi's, Sun Pharma, TCS, HDFC Bank, Infosys, Bharti, ICICI Bank. A large part of the market in terms of heavyweights is doing nothing. But then again, the heavyweight lifting is being done by Reliance alone today. Mahantesh Sabarad as well joins in on the show right now. Mahantesh, hi, afternoon. Soon we'll be counting down to earnings as well. What's the expectation, especially looking at what we've heard from Q1 updates from banks?
So, the quarter one results should be the first quarter post-COVID where we don't have any base effect to really look at and measure the growth rates and the trends thereof from various companies. So the expectation is that most of the companies will start either showing moderated kind of growth, but there will be quality in terms of earnings. So when I say moderated growth, I must clarify that would be on the top line, but the quality of earnings in terms of margin improvements, etc., are going to be decent. As far as banks is concerned, obviously this trend will be slightly different because you will notice that the banks will start reporting actually compression and NIMs. Ever since the interest rates on the deposit sides have actually gone up. They hadn't gone up, if you recall, by much relative to the lending rates. Now the reverse is going to start happening. But here again, I want to focus on the quality. While the NIMs may compress, the quality of earnings will still be better.
Okay, the quality of earnings are likely to be better, at least for some of the banking names. But Mahantesh, what's your take regarding the real estate pack? We've got the Q1 operational updates from a couple of them, the likes of Lodha, smaller ones like Puravankara and Ajmera as well. And it looks like demand is holding up. Contrary to the belief of the interest rate hike, the entire inflation worry, the demand is not going anywhere.
No, actually, that isn't surprising really from the real estate pack, because what had really happened is that the supply constraints on real estate companies, thanks to the COVID period, has gone away. So there are a lot more better supplies coming in. And when I say better supplies, the choices for customers, real estate buyers are better. Interest rates undoubtedly affect the demand trends. That is what is the plain reading. But you should remember that now we have come into a stage where there is, you may call it revenge buying, but the suppressed buying, the suppressed demand, the latent demand is actually coming to the fore. And that is helping the sales trends ahead. And you will also notice that the price trends on the real estate have not moved up too sharply to the discomfort of most buyers. So the better choices in terms of real estate projects, the latent demand surge that is coming to the surface, as well as the price trends being subdued, is all helping the demand stay up.
That it's staying up, and it's clearly evident from the Q1 updates as well that you've seen from Players like Macrotech Developers, even though sequentially they've actually seen a bit of a dip, or for that matter, Purvankara, which came out with its numbers today, the sales value is up 119% on a year-on-year basis and 12% uptick sequentially. Realizations have gone up about 11%, flat sequentially, however, and volumes as well have seen an uptick of 12% on a sequential basis. And smaller ones like in Ajmera as well have seen a bit of a downtick. Sales value is down, but it's a 60% surge nonetheless on a sequential basis that they have seen. And along with that, Mahantesh, what you're also seeing is some of these construction players which are actually holding out, and we often talked about everything from a capacity to an NCC, etc. That entire cluster with the real estate infra boom is actually holding up quite a fair bit.
Yeah, the real estate infra boom, particularly from the government side, is on an upbeat mode. The spending is picking up quite sharply, and therefore, we will find most of these infrastructure players starting to do better. In fact, they never had a problem related to order booking per se, but then most of the projects were getting stuck or getting delayed. The momentum has now gathered pace with the fact that many of these infrastructure companies will be able to report better earnings going ahead. Again, I am repeating it again, but quality of the earnings will be far better for infrastructure companies from the margin perspective. Overall, the interest rate scenario has also cooled off. So much of their debt worries related to the interest rates are now a thing of the past. They will be in a better position to raise a good amount of debt for their ongoing projects for completion.
So since we're talking about the infrastructure and real estate pack, let's also go across to my colleague Sharad. He's picking up some interesting details regarding one of the real estate players. Sharad, tell us, what are you hearing about Suntech?
Well, yes, in focus, we're having Suntech Realty, and what we are gathering from the dealers is HNI buying is seen, and also a probable FPI name has entered the stock. Now, apart from this, the key investors already included in the company and invested from the FPI segment include Monish Pabrai's fund and also Kuwait Investment Authority and Fidelity Group. Now, the stock itself has risen to its maximum level seen in the last 5 months, and the volumes have also been very strong in the days trade, roughly 19 times its 20-day average. But looking at the stock on a year-to-date basis, the stock is still down 10%, while Nifty Realty Index, that itself went up by as high as 24%. So kind of valuations are attractive, what the street is factoring in. And even Yes Securities came out recently with a report with a buy rating on the stock and the target price set at 500 rupees. Now, we did a small channel check as well, and important triggers points are coming, especially in the MMR region front. Inventory liquidation of BKC projects are expected to happen, and that is expected to fetch the company roughly 1800 to 1900 crore rupees. Apart from this, also there's strong responses being seen for the Mira Road project, and an important re-rating could be the 12 million square feet opportunity in the Naigaon area.
Okay, so that's about the entire real estate pack. Let's discuss the FMCG space as well, because for now we've just got very, very different and divergent views. There are two companies that have come out with their operational updates, Marico as well as Godrej Consumer. Godrej Consumer started off on a very positive note, talking about a double-digit growth. The international business, that is the Indonesian business, that was holding steady, and maybe that comparative should come up for you on the screen as well. While for Marico, they're talking about a single-digit growth coming in. The revenue can actually decline, and as far as the international business is concerned, that continues to be under pressure on account of the currency headwinds that they are facing. Naresh, your take on the FMCG pack? I know HUL is the favorite, but if you look at the staple names, even these, the likes of Marico as well as Godrej Consumer, Dabur, Emami, etc., what are the names that you like?
So across the pack, the problem is some of the names have already made a move, like Godrej Consumer still looks interesting. The stock has moved up quite a bit over the last, say in the last 2 months from 900, the stock has come all the way to 1100 levels, but not far away from an all-time high. Still looks interesting. So Godrej Consumer is next. Emami could be the interesting one because that one has gone nowhere for a period of time. And the stock has corrected from a high of 600, 620 levels all the way down to, went to 360 and now at 420, 430. It looks promising. This could slowly and steadily make a comeback towards the 500 mark. So if one has to take a contra bet in FMCG, it would be Emami. The top pick continues to be HUL, which actually, if you look at the 3-year period, it topped out at 2500, 2600 after the COVID bounce in April 20, and the stock has gone nowhere. So I would put all my bets on HUL, which is where the risk reward is the best placed.
MCX, that's one stock which is holding up almost about 8%. Quite a spike up which you saw in MCX midday, and from there it's managed to sustain the gains. Kunal, what's the reading here?
Well, not sure of the reason why the stock is up higher, but then I think two or 3 days back, the stock was down some 10%. There was a bit of a negative news flow for MCX. It fell down from 1650 levels to 1450 in a very sharp gap down manner. And today the stock has retraced. So almost like a V-shaped recovery for the stock in the last 5 or 6 trading sessions. And that's generally very rare to see such kind of gaps being filled on an immediate basis. Ideally, though, the upper end of the gap acts as a major resistances. So now we could probably expect that maybe 1650 mark on closing basis could be a resistance. If we scale past about 1650 levels, we close above those levels, then I would believe that traders could look at a fresh buy on MCX. Otherwise, I think it's better that you stay away from the stock at least for the near term, because such kind of volatility may not be fruitful enough, because the risk reward would not be favorable, as well as both the sides of the price trends, the lower end of the support as well as the higher end of the price resistances, both of them get triggered. So closing about 1650 is where I would initiate a fresh buy for MCX.
Right. BSE, they've approved a buyback, by the way, at 816 rupees per share, and that equates to about almost 375 odd crore rupees. This is, of course, going to be via the tender route. That is one stock which is in focus right now. We just flagged out the June insurance data trends as well, which have come in. So Star Health, ICICI Lombard, these are the counters to look out for. Besides that, of course, we've been highlighting as to how, the buzzing spaces really are within the energy pack today. So HP, BP, IOC, Reliance, they're all holding up very, very steady. Sun TV, by the way, has made a move after a very long time. 4.5% uptick coming in here. Hindustan Copper, that's another buzzing stock in trade. Again, the move started for that stock midway itself. So that's one space which is holding out. The other one, of course, is the finance minister's meeting with the heads of public sector banks. The meeting, of course, is concluded. We are yet to see the takeaways coming in from that meet. So waiting some details on that. But Naresh, just wanted to understand, this move on Sun TV, whether there's any trading opportunity here, because after quite a while, you're seeing a move on Sun.
Yeah, so interesting price action in the last 2 days. The stock has generally been a sideways stock for a long period of time. The stock was at 460 back in 2020, mid also, as well as in start of 2020. And today also we are at 460. The only case is the recent highs are around 467. Crossing that would be a first indication of momentum shifting towards the higher levels. So it's a risk reward trade wherein the stock has gone nowhere and shown momentum for the last 2 sessions. Even Z has shown some momentum. So looks like there is some momentum coming in the media space. So keeping a stop loss at 448 levels, the stock could slowly climb up towards 500 also.
That's about Sun TV. And since we're talking about media and entertainment, how can we not talk about Threads? Have you used it already, Aisha?
Yep.
And how is it?
I'm
Is
part
it better
of the 1
than
million users? It's exactly like Twitter.
10 million, not 1 million.
Oh,
It's now 10 million users which have signed up on a very, very quick pace.
One of the first few to get on it.
But is it like very similar? Is it better? Is it worse? Your expert review.
Absolutely same. But I think let's go across to Sumita and find out what her take is, because I haven't had so much time to really dabble throughout that platform. Sumita, what's your take?
Threads, well, that's what Meta's latest app offering is called. Also the latest entrant in the fray to compete with Twitter after Mastodon and Blue Sky, which have struggled to gain traction. But the question is, can Threads change that and pose as a serious challenger and rival to Twitter, which seems to be in one of its most turbulent years? Well, to begin with, parent company of Threads, that is Meta, stock soared to an 18-month high ahead of its launch day. It also has received 10 million signups in just about 7 hours. So what's new with Threads? Well, the app is a text-based app which allows users to post pictures, messages. Very soon you'll be able to post videos as well. So users can comment, like on posts. They can also restrict, report, and in fact can also enter hidden words to turn out the noise and din and focus on safety. The interface is pretty clean, easy to understand, pretty much like Instagram. However, the biggest feature is interoperability, which basically basically means that very soon that content that's posted on Threads will be available on other apps too, and that use the same underlying software, which is precisely what could change the social networking game. So all you need to do is just access the app on Play Store, press on the center button and start posting. You'll also be able to import all your contacts followed in one single click. These contacts of course are available on Instagram. You can make posts of up to 500 characters, while in case of Twitter, longer posts and videos are available only to Twitter Blue users. In terms of data collection, of course, Threads uses more data than Twitter. But let's come to the main point. Why is Meta taking on Elon Musk? The timing of the launch, remember, could not have been better. Zuckerberg says Threads has been developed to have positive, productive conversations, perhaps hinting on hate speech allegations that Twitter has faced for long. More so after Elon Musk took over last year. Some advertisers also felt alienated and distanced themselves from the platform after allegations of hate speech. Users, in fact, have also protested against the app's paid subscription model. Musk recently also deciding to restrict the number of tweets. So all of that has gotten massive backlash.
Right. Okay, we'll leave it at that. Still in the baby steps. Let's see how Threads actually evolves. But yeah, for those who are not active Twitter users, this is definitely your chance. But anyway, let's move on. Let's talk about what else has been holding out in the market. Eicher Motors has fallen a little bit more, 2.25% lower now. Marico, RBL Bank, Astral, Godrej Consumer Products, these continue to be losers in trade. But I don't think the market is really about that. The Nifty futures have already scaled almost close to 19,550 in trade. And the spot Nifty has already made it to 19,500. Kunal, it doesn't seem like the index wants to consolidate.
It doesn't look like, yes. But, I think the last 2 days, the Bank Nifty has been more range bound. Yeah. So, the put-call ratio indicator which we flagged off was at 45,600. Nifty has made a new high. Bank Nifty is still 300 points lower than that high of 45,600, 650. So that itself tells you that, there are other sectors which are playing a helping hand for the indices. And today, for example, the oil and gas, the energy index has done exceptionally well. So the index trends for the benchmark trends for the Nifty would move up higher. But then when you have such kind of sectoral moves where each sector would get into an overbought territory, it's always better to try and lighten the position in those sectors, wait out for a correction, wait out for a mild dip into the individual stocks like what we saw for HDFC Bank yesterday. I think if you happen to see that for a couple of other banking names, that could actually be a good opportunity to chip in.
Just wanted to highlight Z Entertainment because that hearing is underway in NCLT. So, of course, we'll have to wait by to get the final verdict out. But in terms of the progress, there's an important line coming in wherein they say that even if we get unfavorable order from SAT, the merger cannot be stalled. Even if Mr. Goenka is not the MD of the merged entity, someone else will be the MD. So, the door remains open. And that was something which Mr. Goenka also said in one of his chats with newspapers, that even if I am not there, the merger should go through, and that is what seems to be happening right now with respect to what the counsel of Mr. Goenka is saying to NCLT. And they are saying that even if they get an unfavorable order from SAT, it shouldn't be an overhang as far as the merger is concerned. That's what they are pleading. What happens, we'll have to wait by to get the final verdict out from the NCLT. But time now to shut shop as far as this Thursday trading session is concerned. Thank you everyone for joining us today. Kunal, Mahantesh as well as Naresh, thank you so much for making time. But before we let you go, why not take a quick BTST idea? Naresh, tell us, what are you looking at your buy today, sell tomorrow list?
So first is a buy on Bosch Limited. The stock is on verge of a short-term breakout. Stop loss at 19,200, target price of 20,200. Second is a defensive bet on Hindustan Unilever. Stop loss at 2730, target price of 2,800.
What about you?
Two buy calls. Union Bank is the first stock which I would suggest as a buy. Third or fourth consecutive day of price up move. Today the volumes have come back again for Union Bank on the upside. Targets remain at 85, stop loss at 75. And the second way buy on Fortis. This stock has given a breakout of a multi-week, multi-month high. So trading at 320 odd levels. Would suggest a buy with a target of 340, stop loss at 314.
Okay, let's begin winding up for the day then and tell you how the market is panned out. Are we closing in at 19,500? A little sub that mark maybe on settlement. Yeah, 19,498 thereabouts is where we're at. So optically almost there in any case. M&M really has done its bit today. It's almost managed to clock in a 5% move intraday today. There's been, of course, Apollo Hospitals, which has closed in now with almost a 4% gain. Power Grid, Tata Motors up 2.25%, and Reliance as well with that 2% move has done all the heavy lifting for the index. BPCL, Britannia, Axis Bank, Coal India, ONGC, Cipla, they've all been contributors to today's move. On the flip side, though, one has seen weakness in Eicher Motors, falls another 2.25% today. HDFC Life, HCL Technologies, Maruti, Hindustan Bank, Bajaj Finance, ITC. So it's quite a bit of seesaw with Reliance on one end and these other heavies on the other. HDFC Bank as well have gone home pretty quiet today. The broader end of the market also has outperformed, with the advances taking the lead. So MCX almost an 8% dash there. Hindustan Copper up almost 5%. Sun TV held out 4.5%. And then there was, HPCL as well, like I pointed out, that also has seen a bit of a gain coming in. But Anisha, the big events and cues that we would look out for tomorrow?
Yeah, but before I come to that, I have to mention SIAT because that stock is up 20%, locked in upper circuit. So that definitely deserves mention. And of course, the other tire names, JK Tire as well as Apollo Tires, Action Construction, SJVN, Hindustan Zinc, MCX. These were all of the also some of the buzzers. Yes, talking about the cues that you need to watch out for, you'll get the jobless claims data overnight, so we'll watch out for that, plus the unemployment rate. So that will move the cues when it comes to the US market. In terms of stock-specific action, watch out for Suzlon tomorrow. There's a board meet to consider fundraising. Indian Oil is going to meet to consider the rights issue of equity shares, so that's also important. And tomorrow will be the last date to buy LTI Mindtree if you want to be eligible for the dividend. In terms of the annual general meeting, it's Bank of Baroda as well as IOB that we'll watch out for. And in other events, it's the World Chocolate Day tomorrow, as well as the fact that there is going to be Reliance Jio, which will be announcing the phone platform, and the beta trials will start from tomorrow. So a lot of other important cues also lined up. But nonetheless, the most important one is the global cue and the one that's coming in for Suzlon as well as Indian Oil. But wrapping up